This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and it's finally time for some Black Friday discounts. So we're going to run through a few of those. Then I got a few little tabs. I'm starting to see some more bullish looks. And I'm still seeing a whole heap of bears out there. Ultimately, again, no one really knows, right? So we'll keep taking it one day at a time. But I think today we're just going to have to add some more positions in the member section as we always do. And we'll take it from there, right? So I'll show you kind of how I'm looking at the market. For those of you that have been eagerly awaiting the Black Friday discounts, you'll find something along these lines in the description and the pinned comment to this video. There's all sorts of stuff in here. There's things like trade-in view package discounts. There's physical gold and silver discounts applied to certain gold and silver coins that are listed. You can go and claim 90% off of the Slice mentorship for things like chart requests, weekly Q&A videos, and that kind of stuff. For the merch store, there's a discount running if you want to go and get some Tell That to the Bond Market stuff, or indeed the PDF on cycles. And there is 50% off the Camel Finance Trading Indicator and website package at the moment. For all of this stuff, you can use the code Black Swan. And if you click the links in the pinned comment and description to this video, it'll take you right to the thing you need. And just make sure you use that code Black Swan at checkout. And this website continues to get built out and continues to do more and more stuff. There's a quick start guide here, which will get you through the indicator tutorial and make sure you fully understand how to use it and what it does and everything else, how to customize it and make it do the work for you. There's a whole heap of educational content and stuff, not only about the indicator, but about cycles in general. There's a whole trading guidebook and that kind of thing. There's spaces you can get involved with. The trading guidebook covers everything from cycle trading fundamentals to trend lines to macro and seasonal cycles to economic data. There's just stuff on stuff here. Okay, it literally goes on forever, so you can get as much or as little out of it as you wanted to. There's a whole heap of additional resources on here as well. I've literally never shown any of this stuff, but like, there's so much going on here. It's amazing. There's links to educational videos we've put together, recommended X accounts, technical analysis, and all this kind of stuff. There's a free bonus indicator. Okay, so even if you just get the free trial and you decide it's not for you and you don't want to spend any money, you can use and access all of this stuff and still leave a free bonus indicator, which looks something like this, and you can apply a manual count to it. A couple of tabs for product updates. Okay, so this is general product updates here. They'll be updated whenever we got something new to unleash into the community. There's a whole tab for indicator updates, which are of course just updates pertaining to the indicator itself. Then there's a whole heap of Discord clone type stuff, right? General chat rooms, including community Q&A and that kind of thing. And then if you come down to trading resources, all this stuff is designed to make you a better trader and to make your life as a trader easier. So there's things like a trading diary in here, which has a risk calculator template, a trade size and trading log and an equity curve plotter and all this stuff, so you can track your performance and make sure you're not violating the risk anytime you're making trades, as well as keep a trading journal. There's a video search tool which will let you search every video I've ever posted using keywords that are in the transcript of that video. So if you ever wondered, oh, I want to see that video where Camel said X, Y, and Z, you can use that tool there and it will go and grab any of the videos I've ever posted to YouTube. Keep in mind there's like 1,300 now or something like that, so you can go back and find whatever it was you were looking for. There's also a link to all of my live charts here, okay, so you can pull any of those up if you want my actual charts, as well as a gold and a Bitcoin DCA calculator, which will show you a comparison of if you use the indicator versus a monthly DCA. Even if you're not a trader, you can outperform a DCA by just using the indicator there, as well as a bunch of community stuff and even new games. Okay, I've just got off the phone with Ben. Ben was telling me that we're hoping this is coming in the next 2 to 3 weeks, but we've been building out a game which is designed to be both educational and a game for children, teenagers, adults, everyone of all ages, so that you can actually learn some finance material whilst playing games. Okay, so hopefully that's going to be rolled out on here in the next couple of weeks. And then there's even a meme generator and a bunch more stuff I probably forgot, but I never really shill this thing. I never really talk about it just because it's kind of doing its own thing, right? Like word of mouth is spreading. People that use it are really happy with it. The Trustpilot and in-house reviews and all that kind of thing are all fantastic and all 5 stars. So I haven't really needed to push this, but there is an awful lot more than just the indicator. And of course, I haven't even mentioned the indicator. I use a stripped back version that just gives me the daily cycle lows, okay, and the future expected window for the upcoming cycle lows. But it'll give you weekly cycles, yearly cycles. It'll pick the translation. It does all kinds of stuff here. So highly, highly, highly recommended to go and try it. You do still get a 2-week free discount, okay? So you can try it for free, money back guarantee if you don't like it. And of course, in that time, you can still get, if nothing else, right, a bunch of free material, a bunch of educational content, the free indicator, everything else I showed you already. Please be advised, this discount actually is only going to run until Sunday night, okay? So some of these other things like the merch store discount is going to run for a week, as is the trading view, I believe, and the gold and silver discounts, but the cycle indicator discount expires Sunday night, so please be aware of that. And Slice have given me a limited number because we need to keep the community small. This is limited to 150. So I think that will run for a few days as well, but there are limited spots available on the Slice. Please be advised, this will be the last set of discounts for the foreseeable future. So go and get yourself a nice discount. And without further ado, let's get into the rest of today's episode. I wanted to preface this bit by just saying, I want everyone to take a step back if you haven't already, okay? Try to be an objective observer of what is going on here. It's not about us versus them. It's not about picking a side. It's not about devoting energy to one way or the other. It's just about taking a step back and looking, seeing what we can see. Because I saw this tweet here, right, which says, imagine believing a timing-based calendar cycles versus actual market cycles based on liquidity. They've been since the advent of markets and trading in 1602, right? The idea literally hurts this guy's brain, yet many of CT kin have already succumbed to the notion long ago. But it's funny because here's where I want to start by observing, right? When we scroll down, you'll see an awful lot of these comments are like, I know, right? People are so dumb with the 4-year cycle. People need to learn to accept they may be wrong and reevaluate and pivot. Exit liquidity, sure, bro. As if you need exit liquidity, right? As if you're trading 8, 9, 10 figure size. You're not. You don't need exit liquidity for your $800 position, right? It's just a fact of life. Bitcoin halving initially did create a significant supply shock and scarcity driven rally, but that effect decreases every halving, so its effect as a driver of price. I mean, it was never the halving, right? Again, just an observation here. It's not about us versus them. It's not about picking a side. Real talk. Everyone in this comment section completely agrees with this. Exactly. Insane so-called traders and professionals don't know about this. And the list goes on and on and on. But the reality is here, imagine being this sure of yourself, whilst being completely unaware that liquidity went 180 degrees in the opposite direction to risk plenty of times in the past, including 2007 and 2008, where liquidity was going up the entire way through the crash. So how do you explain this? Okay, and again, let's be really clear. This is not us versus them. This is not people on one side versus the other. It's nothing to do with that. It's just we're trying to collect intelligence here. We're trying to collect data and observe it so that we can put it in our back pocket and maybe draw on it later in life when it could be useful. But the serious question for all these liquidity guys is, how do you explain it? Where liquidity goes up whilst the markets go down. If liquidity is the thing driving the cycles, if increasing liquidity always equals higher risk asset prices, then how is it that we can have great financial crises such as this one in 2007, 2008, with liquidity increasing the entire time? And also, how is it that we pivoted to quantitative tightening here? We actually still have yet to stop QT. Liquidity has been decreasing. Now, yes, there's been some stealth QEs along the way, but all of this rally occurred, okay? And keep in mind, this is not a normal rally. This is some of the best years on record here. Just from the April lows, this market has done over 40%. From the bear market low in October of 2022, this market has doubled. This is not ordinary performance. This is some of the best performance ever recorded for the S&P 500. And the entire thing has occurred on overly restrictive interest rate policy and quantitative tightening, right? Fed balance sheet runoff, tapering. That's what they've been doing during this historic rally. So how is it then that we can have, look at the price of XRP, all the twos, right? If you know, you know. Anyway, how is it that we can have markets putting in some of the best performance ever recorded in human history on overly restrictive interest rate and decreasing liquidity? And I know there's always stealth QE, but let's be honest, there's always some stealth QE in some way, shape or form, right? But the stealth QE to the tune of a few billion or a few hundred billion is nothing compared to what actual QE and Fed balance sheet expansion looks like. It's not even the same. It's not fair to call it print to go burr when they're just shifting money from one account to another, topping up one account or taking from another account, right? Or just issuing a quick BTFP program to a few hundred billion, right? This is not trillions of printed money and Fed balance sheet expansion, and which is primarily done by buying bonds, right? Which only even works when interest rates are low. All of this has occurred on quantitative tightening, on decreasing liquidity. In here, 2007 to 2008, we had the markets crashing, right, in one of the worst stock market crashes on record, whilst liquidity was increasing the entire way up. How is it that the top comes in, the dot-com bubble, okay, and liquidity is increasing the entire time? And also, how is it that we get stellar performance on decreasing liquidity? It doesn't make sense. The simple fact is, we cannot be so reductionist as to say liquidity up, markets up, right, and liquidity down, markets down. There are other forces at play here. There are other ideas. And nobody ever comes back with an answer to this stuff, okay? Primarily because I turn my comments off. But seriously, no one ever has an explanation for this, right? No one can counter this argument because there is no counter to the argument, right? Because it's just objectively correct. You get something like this with 100 odd K impressions, okay, and all these comments, and there's not a single one in there that understands how markets work or how liquidity works or how cycles are even defined. It's not about saying we're right and they're wrong or anything like that. It's just about recognize this stuff. It's important to tuck this stuff in the back pocket because this proliferation of this kind of stuff, okay, only occurs as we start to approach major secular tops in markets. And I was saying this back in October the 6th, we've reached the least favorite part of my cycle. My favorite thing about what's coming soon is the quality increases during bear markets. Many accounts that have gotten by until this point will actually be wiped out and disappear until all that remains is quality. Okay, because remember that old adage, everyone's a genius in a bull market. You know, when you're looking at this kind of stock market performance, okay, in the last few years, for you to sit there and say, I had a good run, I had a good few years, I made a good few bucks, you would have had to have been doing something ridiculously wrong not to. All the charts look like this. It doesn't matter what you bought. Gold, okay, you did extremely well. Bitcoin, I know zoomed in like that, it looks bad, but you did extremely well, okay? This is still an enormous move of almost 10x. Not that far off, right? It really didn't matter what you bought, whether it was small caps or what. Like, absolutely everything has done well. But what people don't realize, okay, is it's easy to make money in a bull market. It's not easy to survive when the cycles turn back down again. So quality season is coming, okay? We'll probably be there in no more than about 6 months, I would think. But first, we got to get through the everyone's an expert phase. And this is why I wanted to bring this up today, okay? Notice how at the moment, and again, not about picking a side, it's about making an objective observation. Do you see everyone thinking they're an expert? Everyone thinking they've got all the answers, everyone just spouting stuff like, oh, the 4-year cycle's dead. How do you define a cycle? Wow, you know, peak to peak or bottom to peak or whatever. They don't even know what they're talking about. You know, you've got people saying liquidity's coming to the market and then posting things that are net liquidity negative for the market, right? We have reached this point in time where everyone thinks they're an expert just because if you bought anything, it went up a lot. And this is only going to get worse. You're just going to continue to see more and more bad takes. You're going to continue to see people that have been here for a while get more and more grumpy and more sour because they've seen it all before over and over and over again. And eventually when the crash does show up, we can finally wipe out all the noobs and the know-it-alls. They'll all disappear. Okay, they'll quit the space. We're already starting to see that. Right? How many guys did you see in 1010 wipe out huge chunks of their account? Even like multi-millionaires were losing their money during the 1010 liquidation, right? Massive accounts with like 500, 600, 800K followers posting saying things like, oh, I had some of the biggest losses I've ever had in my career. You don't know what you're doing then, is the truth, right? That's the absolute fact of the matter, right? Like, your risk should always be managed. You should not be losing huge chunks. You don't get to the point where you've been doing this for a long time and then take some of the biggest losses of your career, right? You have a fixed risk management strategy if you know what you're doing here. But like I said, people don't. Everyone's an expert. Everyone's a genius in a bull market. Everyone thinks they got all the answers, criticizing things they can't even define. And then there's the people like me that just get increasingly grumpy as we approach the tops, right? But the good news is this cleanse will come and all that is left is going to be quality. But first, we probably have got to get a lot more insufferable, right? We've got to have more and more of these bad takes, more and more of these people that are just mocking and jeering things they can't define, to the point where it literally becomes a horrific place to be. And you got to think, right? Everyone is a genius in a bull market, but bear market survival is for the elite of the elite only. Okay, most people will never survive the bear market. They've just never really seen one. They haven't seen it. And you only have to look back a couple of years to the 2022 bear market to see how bad your favorite influencer did, right? They stayed bullish the entire way down until the lows, and then they started to post doom fractals from 2008 and say we're only halfway down. Then we termed that rally the most angriest, most hated, most doubted, most shorted rally in all of human history, because nobody believed the thing until we were about 20% above the prior all-time high. Nobody believed that rally was for real. Everyone was fading it. Everyone was angry. Everyone was sidelined. Everyone was shorting it. Everyone was doom posting the whole way up. Remember the double top gang? As we were approaching all-time highs, we were like, there's going to be the double top gang. They're going to come out and all scream double top. Right? And then they did. And 20% above all-time highs, they finally went, you know what? I've been long the whole time, guys. I've been telling you, right? No receipts. That's what they all do. And that's what they're going to all do this time around as well, right? They're going to stay bullish the entire way down, only to flip bearish right at the bottom. And then they're going to doubt and fade the entire thing thereafter. You know what else they're going to do? Not pivot to commodities. They're going to stay on stocks because they're only going to look back and go, well, printer goes burr means stocks go to the moon. No, it doesn't. Not always, and not this time. Okay, you're going to need to be able to pivot to commodities. And the whole while, they're going to be going, there's no such thing as a 4-year cycle. The bull market went longer than anticipated, and therefore the bear market's going to go longer than anticipated, right? You just know how it is. Everywhere we look, all we see is people that have all the answers. And I don't know this guy, okay? This guy may well be a highly skilled accountant, might be a highly skilled trader. I have no idea, right? But I do know, when we look through the comments, you can just see that people are being psyoped into believing things that just clearly do not exist, right? Now, I think that's important because when we were earlier on in the cycle, this was not a conversation. And that's the real point I'm trying to make here. I've gone on a massive rant and a massive waffle period to get here, but I'm finally going to make my point. And that is that nobody was talking about the end of the 4-year cycle throughout any of this period here, were they? Okay? No one was talking about it then. I know because I was saying I think this is probably going to left translate on a balance of probabilities. That 4-year cycle should left translate according to the rules of cycle theory, okay? And rules of cycle theory state where it doesn't occur in cycle 4, you typically see it in cycle 5, which means we're going to reload left translation for the next cycle, okay? That's the rules of cycle theory. So the entire channel was predicated around the idea that we should probably expect a left translated cycle here, okay? And the entire way between here and here, every man and his dog was going, what's wrong with you, Camel? It's just going to do what it always does. It's going to top month 35, just like it always does. Nothing's ever different. This time's not going to be different. And you know what? They're actually right. All the way until we got here, and then they started cheering on no more 4-year cycles. You know, they were right the entire way up until it mattered most. And then when it mattered most, they've all changed and moved the goalpost and decided liquidity's driving this market, and therefore it's up only forever. And you know the story, right? Now, I think that's of note because we didn't really need to be concerned we were near a major top during here when everyone was saying the same thing. But now they've gotten here and they've all started moving the goalpost and they've all abandoned their original trade theses and they're all starting to mock and jeer at the idea of a 4-year cycle, which they can't even define. I submit to you, okay, that this is in the neighborhood where we would see a top, assuming the top is not in already. So I think we need to keep a real eye on the everyone's an expert phase. I still maintain it's one of these two, okay? I put ever so slightly more weight on it being the red squiggle here, but I do think the max pain would probably be the yellow squiggle. I think if we can get this big push to new all-time highs first, we could actually probably see a lot more people end up trapped just based on the amount of shorting and doubting I'm seeing right here. So maybe we get the red squiggle. I don't really know. As we said all along, we'd have no idea. We'll just keep taking it one day at a time, okay? And we'll let the market structure tell us. If the yellow's on the table, then we should start to really impulse out of here without many pullbacks and without letting people in. And if it's the red and we start to just chop around like this, do a lot of grinding and chopping, then we'd be able to say, okay, wow, that doesn't look anything like a big impulse to the upside. It looks like we're doing the red squiggle from here. But notice how also we went from the end of the world, okay, to now I'm seeing all kinds of bull posting like this. Okay, maybe not. I have absolutely no idea. But it would fit my idea that a handful would do extremely well and the majority would not. And over in the world of the stocks, okay, we're still in record times. We're still in unprecedented times. We're still in a massive blow off top. We're still putting in record back-to-back years. And we're doing all of that before the Fed is even started to really cut rates yet and pause quantitative tightening. And so once again, I think we are set up just based on where the 4-year cycles are for the stocks and gold and everything else to have another one of those times where risk and gold and Bitcoin et al. Decline into their 4-year cycle lows whilst liquidity is increasing the entire time, just like we saw during the GFC. And meanwhile, apparently the futures trading got halted because of a cooling failure at the data center. So we'll see if this induces some Friday volatility for us to enjoy today. Meanwhile, we're getting closer and closer to confirming that rare ZBT, the Zwig Breadth Thrust. And we only need this red line to make it up to about here, okay, and then that will confirm it. Meanwhile, for Bitcoin, it waited and waited and waited, and it has finally decided to pick itself a swing low here to structure a trade around. You can see it do that here in real time, okay? It has waited and waited and waited. It didn't pick any false signals on the way down, even though it was well through its expected window. Okay, it just waits for a swing and a little bit of momentum to follow through, and then it will get you in at the lows, okay? Sometimes it can confirm in as little as 1 candles, and in other times when the price action is much more choppy, okay, it's trained to wait and can take up to 11 candles, depending on how confident it is. But at the end of the day, it's doing what it's supposed to do, okay? It's finding you high probability setups to structure your trade around, and it works on all assets and all time frames. So go and try it. Just go and try it for free for 2 weeks. You use your Black Swan discount if you want it. Worst case scenario, you leave with a bunch of new knowledge and a free indicator, which you can put your own custom counts on. So for Bitcoin, same deal, right? Red or yellow squiggle, okay? Could be this, and it could be the yellow one. We will find out. Stock market was closed yesterday, but it's going to be really important, okay? If we can close a weekly candle above this downward sloping red resistance line, that will fully confirm we got a new cycle in play, and we're going to Valhalla and beyond for the stocks. And that will be interesting to see if the small caps can indeed fire off and print a new high. That would be extremely bullish for a weekly close. We're only a couple of percent away, so I think we could probably do it. Probably about 2% move there. Gold and silver still, roughly speaking, pushing up, aren't they? Okay, is that a breakout for gold in here? almost, right? Almost party time. And silver looks like it's ready to rumble, as do some of these mining stocks, which are already well and truly breaking out, aren't they? Cycle lows again being picked. And you can see the SILJ is also doing the same thing, right? We got this as well in the short-term account. So happy days there. What else is there to say apart from tell that to the bond market and keep telling it to the bond market? And we'll check this with the Dixie setting up for yet another rejection probably, and another left translation and failure down into that 3-year cycle low. Should provide a bit of extra lick into the end of the year for the risk assets to rip higher. And we are still indeed telling that to the bond market, okay? So no changes there. So I hope you enjoyed my rant. I hope you go and enjoy some Black Friday discounts, and I hope you have a fantastic weekend. I'll be back tomorrow, and until then, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see, rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key, taking us stormies on a bumpy ride.